Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, May 19th, and we are we're getting some volatility early in the week here. DXY with a pretty sharp decline yesterday, making the move on Euro and some of the other dollar crosses that we're covering, guys. So on the menu for today, DXY, SPX, dollar CAD, Aussie Kiwi, and dollar peso from last night. Sterling, Euro, EuroCAD, and Kiwi. And we'll round out with gold and dollar yen. I do want to hit the SPX because I don't know if the Pete's are in the room today, but there is certainly an interesting reaction that we're getting at a level here I want to take a look at. Good morning to everyone in the room. Eman, Gary, Jay. We got Peter and Pete here. Steve, Ted, Ziad. Great to see you guys all in the room. Aurelian, great to see you as well. So let's jump right in. I'm kind of a little scattered this morning. I've been all over the place looking at some of these charts and where we stand right now. Let me just take you to the DXY. Here's DXY weekly. Y'all know where we've been here. I don't want to go over this chart again. Went over it at length yesterday. Here's the daily. Here was yesterday's decline. Okay, basically holding the monthly opening range highs. Here's your objective May open, just lower. It's 99.13. Just above that's the 2019 high day close, but you get the picture, right? Be cautious here, right? Not a time to continue to press the dollar, but certainly we're coming to the first area of near-term downtrend support, if anything, right above that 99 handle. So interesting prospects here. It puts Euro in a really interesting spot as well. I just wanted to highlight this one-way route. You got to be careful, okay? Because the back and fill can be pretty sharp. So DXY, quite an interesting stance right into the start of Tuesday trade. Here's SPX. I just wanted to hit this as well because I sort of noted something yesterday in the update, and I kind of just wanted to make sure we're still on the same page here. So here was our last SPX update. Okay, remember the key level was 29.32. We talked about this yesterday in the webinar. Last week, essentially, we made the pivot back above, or yesterday rather, we made the pivot above and we closed right above 29.32. Here's the pullback. Now, here's SPX real quick on the weekly charts. Put it in log formation, just to put things in perspective, right? All things held constant, if we do settle up here, we're basically looking for resumption. All right. If not, this is going to be like the most wicked choke point, and it's going to just reverse nasty like. Bottom line, here's the objective highs that we made back in May. We're still there. You know, the 618-100 confluence zone was so important to us, but this is the third attempt. We've closed above. We did that once before. Momentum is still marking divergence. Not really. We didn't actually register a new high here, so not true divergence, but you see the 60 hold as far as the momentum profile in the daily chart. All I'm saying is the coil hasn't necessarily sprung yet. So I'm very weary or very cautious here. Also, again, just a snapshot approach looks like a possible 5 wave up, or at least 1, 2, 3. We're in fourth. Need another extension 5 to get 30.28 on the upside. But I'm really cautious around this area in SPX. Long story short, if you're holding longs from anything sub 29, I think you go break even and you look for the 30.28. If you're looking for new exposure, there's not really justification to try to fight this on the short side, but the risk is still for a little bit more of an exhaustion pull before the break. 29.72 is the objective swing high from the late April run. Still holding. So look for a reaction. Again, it's still 29.32, same region, 2018 high day close, 618 extension, still that same zone. Remember last week, we sat there consolidated right above that or right around that level, broke to the downside. Here's the break back above. See if it offers some support. Anything beyond 29.72 on the long side, you're looking for 30.28. So a precarious position for sure on SPX here on this move higher. And again, if this break is legit, downside should really be governed by 29.30 max. So I'm very interested to see how the SPX performs today. Again, guys, a lot of the advance that we saw yesterday was really fueled by some headline data that we are getting some more advancements, some more news, some more a rosier picture for the outlook for a vaccine, a COVID vaccine in the near term. That's my hesitation with just straight up, flat out calling this breakout legit, is that it was really headline inspired. If this is the deal, then we really should see acceleration. We really should see hold stabilization above 29.30. Anything beyond that, again, you're risking another move down to the pivot. Bullish inval for the near-term advance now is raised, excuse me, to 28.75, 28.74. All right, so that's a quick look at the SPX on the back of this near-term move here. Pretty big, major region. If this breakout's legit, downside should be governed here. All right, so those are two variables outside of the scope of last night's update. Just wanted to start with those, give you quick updates as they may be moving as we go on. But let's jump into last night's update on dollar CAD. So here's where Loonie is. We're heading into a near-term support structure, namely the low day close for the previous month. The May objective open comes in at 139.45, just thereabouts. You have basic slope support off the lows. Now, it's only a 2-point touch, so you don't want to stress these per se, but a break below this, you're looking for the objective monthly opening range lows. That's right around 139. Break below that, April low comes in at 38.50 in that key support zone. So we did break that slope, not really getting acceleration per se, but it still looks clean. So the weekly opening range, or excuse me, the monthly opening range just lower at 39. Haven't quite scratched that yet. I think the low we registered so far was 39.05, but you get the picture. You're basically testing the slope, the range extremes for the month. Real quick look back at dollar CAD for the longer term picture. Here's dollar CAD on the weekly chart. Okay. Which is why I say on a lot of these trades, the coil hasn't sprung yet. Okay, here's the March Ripper. We've just been making a series of lower highs, series of higher lows. So again, our base case scenario is for a deeper pullback, at least a 50, get 38.12 before you start to think resumption. It's been a choppy few weeks, and certainly the consolidation coil is still there. But man, I think the levels are still pretty clean. Okay, here's the daily chart for dollar CAD. Here's your monthly open. Set a new high. You test new low. Didn't even test the previous month's low. You stopped right there. You go for a test of the highs, fails ahead of the monthly opening range high. Here's an exact test of the monthly opening range low. Despite all the intraday noise and the hoopla and the volatility, always break it down to basics. You take a look at this from a monthly standpoint, or excuse me, from a daily standpoint, from where we are in the month. We haven't done anything yet. We haven't done anything yet. True, I am more inclined to look for a downside move before we start to look at resumption, right? I think this is still an uptrend. No one's arguing that. Still think the risk is for a deeper pullback, but at the end of the day, the monthly opening range is right here. I'm not going to sell into support. So if you're holding shorts, watch this pivot, break below 39, you're on your way. I think you get a larger move. Look for last month's low. From a fib lateral level, the 2017 high converges on the 50% retracement of just this year's advance. That gives you like 37, 38, 37.90, 38.12, this zone here. But first things first, right now we're just at the slope. We're just at the range lows for the month. Okay, and I say this because until we break some of these consolidation ranges, we just have to play with what the market gives us. So anyway, here's the intraday chart. Like I said, it looks like it broke. You're marking divergence on that low. If you're holding on for 39, make sure your stops at break even or better at this point. If you're looking for new positioning on the short side, I don't think you want to touch this until you get some sort of recovery from here. 140 is near-term resistance. I'd want to see any rebounds hold that. If we're still moving lower on the stretch, ideally initial resistance 39.45, objective monthly open, low day close. And levels are unchanged if we get the downside move. Now, another thing that I was wanting to tack on with this is a slope, right, or a pitchfork to be able to identify with a little bit more clarity like what the gradient is for the decline. And there hasn't really been anything that's too compelling. Okay, I was working with something like this to see if it was going to offer something yesterday. It may be in play. I still don't want you guys to operate off this with too much conviction, but it highlights the same levels that we're looking at. And in time, it actually highlights that base key support near 30, 38 essentially into tomorrow. So possible slope at play here. We'll see how this pans out. Long story short, the downside of dollar CAD is starting to head towards the monthly opening range. The coil is still there in my mind. So look to clean up some short positioning from here. Not really interested in playing a rebound on a recovery. Even if you do get if you do get a decent signal, 140 is max, but notice that we're still within this range, right? So CAD showing some strength here, and I guess someone asked here yesterday in the webinar on crude, and I was telling you guys like the bias is constructive, but how do you effectively trade that? And one of the ways that we can do that is through CAD. Again, we continue to see CAD give us some strength, dollar CAD lower, as we've seen that rebound materialize. So just some food for thought there. Any questions on Looney? No change to any of those levels. The only level not highlighted here in this chart, guys, is just the monthly opening range low, the objective low at 39. So keep your eye on that. All right, Aussie dollar number 4. Here's what Aussie looks like. So this thing is all of these trades, guys, are at the same exact. They're doing the same thing. They're testing the extremes of the near-term coil and price. Here's Aussie on the weekly chart. Man, like what do you do with that? You play the range, you respect the range, and when that range breaks, man, we're going to get some definitive bias here. Topside targets on the weekly standpoint, 66.60 and 67.33. That's the 2019 low close, and the 2008 low week close, going all the way back to like crisis time. So big zones on the upside. Downside support, unfortunately, is really nothing to weigh down here. 62, don't even want to talk about that right now. You're so far off. Just want to show you where we are in broader trend on the weekly chart. Momentum, right at 50. This could break either way. Here's Aussie on the daily chart. A little bit more detail here, a little bit more conviction. Here's the monthly open. You set a low, you retest the lows, you go for a break of last month's high. That high close holds. Contraction, contraction, and that's still been the name of the game for Aussie ever since. 64.17, 64.50, we were looking for a major pivot there. We got it on the way up. The start of the month has been messy. Don't really want to like put too much emphasis on this right now. More so just these pink lines. Very simple consolidation range. A topside breach, specifically 65.85, the March high day close, is needed to get that kick back up into 66.80s and 66.60, the zone here. At the end of the day, a break below the lower parallel, yeah, there could be a pretty mean washout in Aussie. So until we break this range, that's all we're playing within. Any longs that you take, you kind of want to clean up. If you want to leave a little on the table with a break-even stop, just in case you get the breakout, fine. But you're at resistance. Period. End of conversation. Exclamation point. Here it is on the near-term chart. So Interestingly enough, the decline that we talked about last week actually rebounded with a perfect 100% extension off the high, right? That was 64.07. I think the low was like 64.04, 64.03 on both attempts right into the close of the week. So for Aussie, dollar CAD levels unchanged. Here's what Aussie looked like last night. The breakout of this near-term slope off the highs had us looking for the April close high, and that was 65.55. That's what we're testing right here. March high day close 65.85. That's what we need to validate the breakout of this consolidation, is a breach above the March high day close. That's the sort of conviction breakout, right? On the downside, 64. We're just going to hold that. Last week's low, if you break below that, it's going to necessitate a break of this multi-point slope touch here that we rebounded off last week. That's going to be our near-term bullish inval. So it's make or break here. You know what I mean? It's make or break here. Looking at this from a near-term standpoint, looks like, again, possible five-wave structure up, divergence into slope resistance and the April close high. Man, if you don't get kicked back here, the advance should accelerate right through 65.85. But if you are going to get a relief rally in the dollar, an exhaustion high here in Aussie, this would be the spot to look. This would be the spot to look. Does that make sense, guys? It's an interesting spot for Aussie. Very interesting spot for Aussie. Now, what does that tell us about Aussie Kiwi, which is another one that was brought to our attention here in the webinars? Someone was asking about it, and it came into our attention last week. Now we broke, here was the weekly chart, we broke that slope. We were looking at a 2-point touch from the 2018, 2019 highs. We saw a third point again on that initial touch. Here was last week. We broke right through, but there was something that was hiding there that brought my attention to this again. And although the breakout did give us a pretty decent 100 pip plus rally to the upside, there's more reason for cause for concern here. Here's Aussie Kiwi on the weekly chart. And here's Aussie Kiwi as it stood last night. So again, this pitchfork we just added off the 2019, 2020 lows, right? Boom, 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 right? This was just added last night. The 75% line converges right here on that former swing low from late 2017. It was a major pivot. Break, acceleration, resistance, break, acceleration, kind of accelerated on both sides there. Resistance, resistance, converged right there. That gave us a range of 107.94 to 108.24, right? Good spot to look for some resistance. RSI, the highest levels that we've seen since the highs registered back here. So again, momentum hitting extremes too. And while we were playing under the assumption that we made that breakout last week, quickly started to look for, again, for possible topside exhaustion. So that was kind of the idea of this setup last night. We were heading right into it. Here's what the daily chart looked like. You had almost a doji there, pretty nice long wicks on both sides, but failure again ahead of the 2019 high day close. That's 108.33 on the daily chart. Here's what that looked like. Right? And I guess the rest is history. Worked out pretty well. Now, the initial pullback is now testing. I just wanted to highlight this red slope that we initially played last week that kind of validated the breakout with this move. That's the first level we want to look for interruption, okay? But for me, on a daily standpoint, the high day close that we made for that April run, which also generated a breach and acceleration of the breakout, converges on basic channel. If we take it off the lows and the lows we just made, that gives you 107.15. Okay, so a level to watch. That's kind of the breakdown level. Note that we've been marking divergence on the daily chart with the last three reference highs, 1, 2, 3, lower high in RSI, lower high in RSI. The hallmarks are there. The hallmarks are there. Now, what's this going to be? Is it going to be Aussie weakness or is it going to be accelerated Kiwi strength? We'll look at Kiwi in just a moment, but if the Kiwi is to catch up, right, recoup a little bit more of the disastrous loss you saw, yeah, it might be Kiwi strength that drives this lower. So we'll get to that in a moment, but here's Aussie Kiwi on the intraday, and here's what the scalp looks like. So recall that this was the initial channel that we were looking at, okay, and we pivoted below it last week. We broke back above it, kept the focus higher. This was the first level to look for that was noting on the way down last night. If we break there, 107.52, and there's that 107.22 level, 107.15 high day close, and that longer term 618. So there's the first one hit. Again, I think you look lower, my humble opinion, while below 107.90s. Okay, so we want to drop that sort of zone of resistance to here. The weekly open is just higher, for the record. You know, I don't really want to even see a test of the weekly open from these levels, but the weekly open is up here at like 108 and change. Let me mark that for you. $108.07, 108.07. Okay. We'll call that bearish inval, but near-term resistance. The real pivot has to be, in my humble opinion, again, the 107.15 level. If you make it below that, I think it's safe for there's nothing really safe in trading, but safer to say that we are in a near-term correction, exhaustion high off of both uptrend resistance and a possible false break of downtrend resistance. So either way would shift the near-term focus lower if we break below 107.15. Watch for a reaction there. Questions on Aussie Kiwi, number 5. Right then, peso looked like this. Just wanted to give an update on this last night as well. Something that we've been tracking pretty closely. Here's what peso's doing. The consolidation, the contraction is still in play. Now, the daily chart, this is what we were looking at last week. Whether you want to call this a 2-point touch or if you want to count that last, scratch and failure as a third point, the whole point of this is that it is a contraction range, right below resistance. The near-term picture looked clear on an approach like this, looking at it more as sort of a descending wedge formation, a contraction triangle, something more of the slope rather than just an asymmetric triangle or wedge formation. So here's where we were last night, trading right below the 75% line. That actually held. We moved down again. This is the levels we're looking for. It's either a breach and rupture through 24, 1556, this zone here, or break below 23, 2710, and that would give you the resumptive move towards longer term targets down here. Until we do, we're in the contraction. Same thing with dollar CAD, same thing with Aussie dollar. Contraction, 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 contraction. These consolidation zones will break. Till they do, respect the ranges. So really nothing to update here on peso. Levels are exactly the same. Till we clear, again, this consolidation that we've been in since the start of the month, we're going to have to just play the levels as they come. Again, for me, there's nothing here, guys. I haven't touched this. Not interested in playing this range until we get the contraction break, at least in peso. All right. Who's on sterling? Number 7, here's British pound. So here's what it looked like as we opened up the week. The level in focus was a low day close, 120.84. You had the median line there for the pitchfork that we were trading in. Nice convergence. We closed last week just above it. Now you got the rebound into the start of the week. Does it have any oomph? Coming to the first major level of resistance. And that's first 122.82, just a swing low and a pivot in price, but just higher, you got those upper parallels. Okay, both the upper parallel for the pitchfork, which is just a little bit higher near 23, and former slope support, right? Both those converge just above 23. A little bit different here in sterling in that it looks like the contraction had broken. But again, taking a look back, whoops, I'm sorry. There's a mismatch here on trading view, which happens every now and then, showing dollar Swiss. Okay, here's sterling. Sorry about that, guys. Here's the sterling on the daily chart. So while it does look like the contraction broke here, right? And in fact, we did break to fresh monthly lows. We took out last month's lows. Here's yesterday's performance, or here's yesterday's candle. Really strong rebound off the 2019 low day close. It was 120.84. It wasn't an outside candle, but it was a pretty strong reversal candle. So look, still think you have a little bit more upside to go. If this is a true break of a consolidation formation, then you still have a little bit more, maybe near 23. Wait a minute, stop traffic. That's where our slope convergence is here too. Okay, so one other rendering of this decline, just a quick note of what the retracement would look like. And a 38.2 comes in just ahead of that. So one thing to consider, just move the 50 for, is 22.93. You know what I mean? Let's not get stubborn. If it doesn't get the extension into 24, or into 23 rather, I just want to be mindful of this. Failure at that point or below would suggest that you're not ready for the sort of reversal breakout yet. You're still going to dangle here a little bit lower. For me, the play was the decline towards 2084. Now that we're rebounding it off these levels, the focus is either we get back above 23 and we're right back onto an upside bias, or if this fails, it does shift the focus lower, but I still don't really want to play this aggressively beyond 2084 until we get a daily close there, especially with what markets are doing right now. So look, beyond that, the next downside is like 119.50 post-Brexit low. So the whole focus is on this zone right now. If we rally, the immediate focus first press into this zone. The reaction here is what should tell us where we should go from here. If we fail miserably and it just breaks lower, I do think you risk another challenge of the lows. But ultimately, if we close above this zone, I think sterling has a opportunity here to possibly make a move again. Questions on British pound? They do get core inflation data on tap tomorrow, so I don't know if that's going to be really major market focus right now with everything that's been going on and everyone trying to focus on how the reopening efforts are playing out, supply chains and all this. That being said, markets are expecting a period of 1.5% on the core rate for inflation from the UK, down from 1.6. So year on year, it's supposed to come in at like 0.9, super soft. So unless we're, way off that mark. Okay, so that is sterling. Alongside that, let's take a quick circle back to euro. Here's what euro looks like. A little bit cleaner of a move. So one of the cleaner of the setups this week. Here's euro as we start off the week, right above basic slope support, extending off the March low. You see it there in pink. Here's what it looked like into the open of trade on Sunday. Near-term resistance 108.50. We needed a breach above 108.23. I'm sorry, 108.93, 108.97. That's the zone we need to kind of break to at least dispel this near-term downside bias. Now, the May open at 109.52, that's the real test. Okay, and there's also basic slope resistance coming off the highs there. So we tested that. Oh, here it is right here. So we tested that today. Converges on the monthly open. We have to see what the daily close looks like. Excuse me. If we close the day above this, it would at least help support the upside bias. That said, this is near-term resistance. Here's what it looks like on the scalp. Okay, there's your objective May open. You know, kind of just to mess with this a little bit, guys. This is the pitchfork I showed you in that report was this, which all converged here. If you take a little bit longer of a stance or a previous high, it does give us a little bit better of a play and a pivot along the gradient, right? So it kind of puts this back up here. So we're still in this upslope, but you have confluence resistance here. So look, if the pullback still has legs, 109.20s, max 109, okay, on this pullback today, next upside target is 109.86. That is the 618 of the drop. Got to respect that level. Gotta respect that level. So a nice advance, really clean structure on the advance. We're coming off of confluence upslope and downslope resistance. Wouldn't be surprised to see this kick back 109.20s, 109, both levels of interest for exhaustion if this is going to hold. The top side, you still have to contend with 109.86. So if you're holding along and we get 109.86, I would still take a little off the table there. Stops break even or better. I mean, if we break that, 110, 110.57 is just going to be like sort of soft targets. So you have the swing high from back here, the May opening range high is objective, 110.20s, and then 110.57. But this is the first problem, sort of more significant problem area for Euro on this advance. Again, here's the daily chart and a quick roundabout for the weekly chart. Here's Euro. Remember that range that we talked about literally for the last 5 weeks? 107.77, 109.76. Here we are, ping pong. Definition of a range. And you can tell these things are kind of range bound. And my propensity to more rely on the range than trying to play the breakout is every time you come near range resistance, CNBC, Reuters, Bloomberg, oh, here's 113 euro. Every time we come near range support, oh, and here's 105 euro. Yeah, right? Every time you see those extremes in price, guys, just run the other direction. So we're not really getting, I think, at least from my scan of just the basic news of wires today, I'm not really getting that extreme yet, but here we are, again, testing multi-week range highs. It is the simple low week close from last year, 108, 109.76. Watch for a reaction at that level. Momentum literally at 50. I mean, we can't flatline more than this. So things are poised, guys. The levels are clean. Patience pays in these contraction moves until we get the validation breakouts. I think you still have to stay nimble. Euro CAD is another one that we covered, kind of off cuff cross here. Euro CAD was another one that's just kind of just testing monthly open resistance. Here's what it looked like into the start of the week. Right, here's what it looked like on Sunday. Level that we were focused on was 152.73, 152.82. Objective May open, longer term pivot in price was last week's high. We ran right into it, and that's what's still holding to start off the week. Here's the intraday chart on Sunday. Here's the intraday chart heading into Tuesday. No change. No change. Pullback found support again. This is the 618 slope, guys, of this pitchfork. Offered really nice support last week. Returned just ahead of it. Here we are right at resistance again, giving us a pretty clean weekly opening range just below the monthly open. Okay, puts more emphasis on a topside breach above 152.83, 152.82 to get the ball going towards 53, 55 and beyond. Look, support, watch the weekly opening range low, but key support still 51.50. The uncovered close, that's way back, a couple years back, but it's the basic 618 retracement of the advance off the monthly low at the same time as well, and that converges on slope. So I still like that for near-term support, key support, and near-term bullish invalidation. Any questions here on EuroCAD? All right. Number 9, Kiwi 10 looks like this. The com block has been quite interesting to say the least. So what looked like a massive breakdown and sort of a complete sell-off in Kiwi last week. Remember, we had how many days in a row down? It was pretty crazy. Came off of 59.26, was a pretty major level. 2006 lows. Here was the weekly open. Bearish inval we had at 60.40, which was basic slope resistance and this real decent pivot in price. Not only did we halt there and kind of hover there for a while, here's the accelerated breakout. So for me, it puts us right back into the range, guys. If anything, that was just a simple test of the April swing lows, the late April swing lows. What do we count that as? What do we count that as? Well, the objective high day close and the May open is 61.26. I still have that marked as our sort of breakout zone, right? Different animal from Aussie, and a lot of times, guys, these non-confirmation highs and lows. You hear Jamie and myself talk about these quite often. Related assets, the divergence, when we have one that's striking or pressing a new high while the other one is not, a lot of times that happens at market turns, or at least near-term reversals. So here you had Kiwi with a much steeper low, whereas Aussie didn't even make a new monthly low. Might be the sort of pretense of something to come here. Long story short, I don't really have a play on this. If you're holding longs, if you played the breakout and you were targeting 60.40 and you're still holding it, stop below 60.40 sounds good to me because you still might get this extension to 61.26. If you're looking for new exposure, I would sit this one out. I don't have anything to do from here. Pullbacks 60.40, we'll see if that holds a support, may offer a nice stance to get back on that move towards 61.26, but at the end of the day, this thing stretched pretty hard. It's a massive range. It might be an expansionary range. Don't really want to mess with Kiwi at this point. It was a really nice move down. Remember, our last target last week was somewhere around here, 60 handle. So on this move up, watch 61.26. For me, that's big. Monthly open, last month's high day close. A breach above that zone is really what's necessary, what's needed to suggest we have a larger play to the upside here in Kiwi. Questions on New Zealand dollar? Okay. Last but not least, gold and dollar yen, is it? Here is gold. So here's our last update on gold. Starting off the week, remember 1747, 1750, huge zone. Huge zone. We closed above 1732 last Friday. We were talking about how critical of a level this was. If you look at gold on every single time frame, especially here on the weekly chart, what an absolute critical threshold. We're playing with fire here. Here's gold. Here's gold. Just as everyone's getting super bullish and it looked like it was breaking to a fresh multi-week high, this still could be the biggest fake out ever. And I don't want to just play, the emotions card and say, oh man, this might be a great opportunity, but I'm still cautious. I'm still not buying it. Look at that weekly divergence. Again, it means different things to different people. If you're holding a longer term position, you're a physical holder of gold, you're in anything sub 1600 or even 17. Yeah, you just want to maybe take something off the table. If not, really, watch price action for a large return, if not a breakout here. If you're looking for something near term, buying just doesn't make sense to me here. From the weekly standpoint, you're at divergence into uptrend resistance on multi-week, sort of a tired approach. Here's gold on the daily chart. All right. Big old reversal candle yesterday on a failed attempt to break the objective April swing highs. Still haven't closed above that level. And yesterday, interestingly enough, we actually closed back below 1732, which is what I was telling you about in the webinar yesterday when we were talking on daily FX. I have to really watch what I say on that forum because, again, regulatory restrictions have kind of like held down. But really, if we close below 1732, for me, that was kind of a possibility for this all to be a false break scenario. It still is. Still is. Here's momentum at 60 on the daily chart with price back below 1747. Here's the intraday chart. Now, if anything, it looks like the approach just came up off of uptrend resistance. So even for the advance, just off the lows that we made back in April, late April, and the May 1st low right here. Here's the upper parallel. Looks like we kind of came into that and pulled back. Here's the median line support. If we fail today at 1750 or ahead of 1748, you'd be looking for a larger pullback in gold. Okay, basically, if we break below this median line, you're looking for a test of those swing lows from last week, maybe another test of the 25% line, even down as low as 1700, 1691 would be, would be fair. But for me, at least right now, below 1750, which is above, again, here's the weekly objective open, 1743. I think below 1750, this could be a fake out that a lot of people are going to get stung on. I hate it with that fake out spike. It puts us hands off, I think you mean. Yeah, I think that's the more prudent thing to do, Eman. And I don't need to tell you, this thing gets clean in price and we get breakouts and really clean breakouts and plays all the time. I think we need to respect it when it's testing these multi-year levels. So much event risk and so much headline risk as price comes into like multi-year slope resistance. This is where fortunes are lost and made, right? You got the people who are still, oh, well, Corona gold still got to continue to go up. Well, I mean, they might be right in the end of the day, but we're at resistance. I'm not going to buy on that premise unless resistance breaks. So I've had my eyes glued on gold to start off the week. Sarub asking about silver. Not quite as clean here, silver. I still think there's a little bit more upside here. Remember the level that I was talking to you guys about last time we talked about silver was right here at 16 and change. It was like 1648, 1658. It's the 618 retracement of the yearly range, essentially. And the 100%, this is just a pivot zone that we had declined at, but a decent pivot in price, right? So this is the weekly chart. Hello, do I still have audio? Sorry about that. This is the weekly chart. So yeah, it's a breakout, but I don't think this is quite as monumentous as it is on gold from where we are in broader trend. You know what I mean? So here's gold or silver rather. Let's see what this looks like on the daily chart. Yeah, 1750 still resistance. That's last year's open. Oh, I'm sorry. This is this year's open, January 20. All right. So you got a nice little zone here, actually. Sarub, watch this. Watch this zone. Wow, it's about to put in like 5 days up. So look, trend resistance, key resistance on this one, Sarub, I'd still leave it up at 1840. The immediate focus on this stretch higher is here at 1750, 1780. This 30 cent range is pretty big. It's pretty big. Objective yearly open, not really up for debate, right? Fact. And the 618 retracement of the decline off the highs that he made back in 2016. So that whole drop, this is the first attempt at the 618. I'd be watching for possible near-term exhaustion on the long side here for a pullback. But as far as targets for a pullback trade, you're still an overbought on the daily chart, so I really wouldn't try to fight this just yet. B, there's no structure on the intraday chart, Sarub, to give us guidance for how we should be looking to play this short, so I wouldn't play it there either. Now, if you were to pump fake into another high, or you get some structure, you get some slope, sure. Let's see if we can get a basic 38.2 the stretch. Maybe that'd be a nice pullback, but there's no setup per se here yet for an actual operable trade. Hope that helps, Sarub. Bringing our attention there to silver. 9, that was 10, 11, silver was 12. Last but not least, dollar yen. Did we hit that yet? Here's dollar yen. As it looked, I guess this was 14th, on the 14th last week. Here's dollar yen right now. I think it's looking pretty clean. A little bit ahead of schedule. So 108.08 is what I told you guys, right? Is up here. It's a 618 retracement of the decline. We were looking to stay constructive above 106.67. Didn't get another test of that low. We did pull back, but we didn't get another test of that low. We held this slope. And here we are taking out 107.68, which is that 50% retrace. So the 618 is at 108.08, but it converges on the median a little later. So it's coming ahead of schedule. Here's what it looks like on dollar yen. Looking for a reaction up here. Now we have had already a decent pivot at that region. Here's the break below on the way down. Instant resistance, resistance, if you want to call that. Here's the 618 at 108.08. Topside break beyond that. The next major level of resistance is going to be right at the slope that caught the high last week. The objective yearly open, fact, not up for interpretation. And a basic 786 of the drop that gives you 108.62, 108.65. So loving the levels on dollar yen, which is kind of feel dirty, right? But the levels are clean. First level in focus is going to be this 618 just higher. Look, ideally you'd want to stay constructive above 107, but you have to drop or you have to raise bullish invalidation at least now to the May open. So that would be the only thing that would sort of shift the focus lower. Near-term support, ideally ahead of 107.37. Topside targets right here. Depends on where we are in the slope, but really the bigger target is right at that yearly open. I'm going to drop this 50. Actually, hold on, bear with me 1 second. This 618 is null and void now too. And we'll put in that opening range high for the week, which converges on slope. There you go. And that'll beat Friday's high too. 107.50. Near-term support, 107.13, bullish invalidation. Immediate topside resistance targets at 108.08. And right on up into 108.60, 108.65. Questions on the dollar yen? $100 off the low, just for argument's sake, comes in at 108.51. Open that key zone of resistance up 10 pips, will you? On this immediate advance. That's your key zone of resistance for dollar yen. And if we were to drop the slope, let's say we just go with a basic parallel of slope support. Just something I want to show you as well. I was looking at this yesterday. Let's just say we use the slope extremes on the low. Look where that converges. Now, it just so happens that that's 75% line is about the same time frame, same reference point. You're basically looking at tomorrow into the close of tomorrow, open of Asia tomorrow, as when that slope will be significant from a time value. For now, I'm willing just to work with the pitchfork as is, but just wanted to highlight there's very different ways that you can arrive at the same, time value and price value. Just depends on your take on the gradient. Anyway, that is dollar yen. Last but not least, any other questions or trade setups, guys? Kind of gave a full suite today of 13 different setups, but wanted to get through all of these as we get tighter into the last full week of trade for the month. Quick reminder that Monday is going to be Memorial Day in the US, so there's going to be a holiday there. It won't be any updates. And Tuesday I'll also be off, so we won't have a webinar there. So pretty much after Thursday, we'll be waiting until next Thursday for our next webinar here on SB. So I will see you in 2 days' time. Bring any questions that you have for the extended break. Until we get these range breaks, guys, as we approach the extremes, be careful. Playing the inside doesn't pay until we get the breaks, but as we get closer and closer to the apex of these consolidation patterns, man, it's on tap. Enjoy dollar yen while it lasts. I will see you guys on Thursday. Best of luck trading. Cheers.